of this entire show, how they are running their show. Okay. Do we have that? Okay, so let's start. If you see in a market system or MIS, that is management information system, or I would say database management system, right? So that we have with the NSE, BSE, and London Stock Exchange, New York Stock Exchange. What those are? You can see the platforms there, right? And the brokers which that they're providing access to you to access the main database where you can see the buyer and sellers of that particular security, correct? So if we'll take the example of NSE, National Stock Exchange. On NSE platform you can see the listed securities, all the listed securities. And what are those? Common equity, correct? Options, not a preferentials. Options, put call, then futures. See, bonds, even those are, you can check on NSE site, but those are not listed anywhere, right? Even if you go and check, so we have, yeah, secondary market. See, every security they trade into the secondary market only. The primary market, it is place where you can do the negotiation, right? You can do the negotiation, sign the agreements, draft, maybe the counterparts they agreed on their terms, and once the trade execute, everything will be done in the secondary market. Secondary market means it's an NSE platform, National Stock Exchange. So here you can see the two things, which is one is listed, right, and another one is that the security is not listed on NSE platform, but still that the security information is available with the NSE, National Stock Exchange. That you can easily access the information, send the request for buy and sell, and get that information, and then even execute the trade into it if you want. Every broker they provide the information of that particular security, especially bonds and government securities, money market instruments. Right? We'll check that as well. See, most of the securities now are in a electronic form only. Most of the securities. That's the reason we just in the system we just see the numbers: treasury bills, 100 treasury bills, 100 bonds, 200 bonds. All right. So we don't even transfer physical security to anyone unless and until we don't have any request from the counterpart that they are looking for physical certificates. There was one client. His father still means they have holded the physical securities of Maruti and Suzuki. They're the Maruti company. Physical certificates. Right. So now in their demat account, you cannot see that any security in the digital form with them. But their son is doing trading in digital securities. Correct. Even he is also holding securities of Maruti, but he is holding a digital securities. And his father, they are holding the physical certificates of a company. Still, if let's say you are also a trader or investor, you are looking for physical certificates, you can send a request to the broker. Broker can send that request to the NSDL, and NSDL they can issue the physical certificate to you, so they can send the securities to you via post. Within 1 week, that they will get your certificates if you want. And a similar way, if you want that the digital securities should be in that the physical certificates, that if you want to convert into that the digital form, you can do the same process. You can visit the Zerodha office or any other broker office. So the broker office, they can send your physical certificates to the NSDL, that they have received physical certificate. So they will send that certificate to the NSDL office, and NSDL again that converts security into digital form. And after 1 week, that security will be converted into digital form, and that will credit it to your accounts in the demat account. Yeah, all right. So that we call dematerialized and reverse. Convert into physical into digital, dematerialized. Right. And there is another one which is dematerialized. Yeah, correct. So from the digital to physical. Okay. This is the process. But the point here is, apart from that, there are unlisted securities as well. That security we called over the counter. This market is everywhere. Apart from NSU office, this market you can see anywhere, everywhere. All these transactions that we are doing in a over the counter environment, over the counter. And here the securities would be bonds, forward, swaps, ABS, MBS, repurchase agreements, loans, loan syndications, and many more like Mesa financing and all. Mesa financing, which is similar to the loan syndications. So more than one banks, they come together, they create the syndication, and they provide loan to that the under construction project or work in progress project. That funding we call Mesa 9 or mezzanine financing. Loan syndication, again, more than one institutions, they provide loans to the one company just to reduce or mitigate the risk. Right? Let's say if you take the example of uh, there is a one Atos company and who won the 10,000 crore in INR. If they approach for HDFC Bank, they will deny this. They will not be able to provide 10,000 crores solely. Simple. Because see, as simple as that, every business they will look for a diversification. Right? Then what they can do, they can approach to the Axis, ICICI, SBI, IDBI, right? And there are many more banks. Let's say there are 5 banks. They can come together. See, HDFC, let's say this deal is from the actual HDFC, right? So might be HDFC can contribute more than other banks. And the rest bank, they can contribute like to 1,000, 1,000 and 1,000. Here you can see the word which is senior loan. Senior, it means the person who is holding a high amount or high contribution in the loan. That loan we call senior loan. Right. Apart from that, you can see the word like senior A, B, C, D. Then the senior B would be this, the another loan. Why? Because if let's say tomorrow Atos they declare default on the payment, right? Then HDFC can sell the Atos company's assets in the market. Let's say they receive 12,000 crore once the asset proceed with the sell and all. And first of all, HDFC Bank will cover their amount first. They will cover their amount. and then they will transfer that entire amount to the Axis Bank. Then Axis Bank will cover their position and they will transfer to the next. That's how they can cover their position along with the interest payment, right? And the remaining amount they can transfer to the company's account. Take your amount and do whatever you want to, right? That's how loan syndication business works. Right, more than one institutions they come together and they offer the loan facility to the client. Here, if you can see, if the HDFC Bank offer 10,000 crore independently, and after 2 to 3 years, let's say the ATOS declare as a bankrupt, right? And if the HDFC go through the asset proceeding, sell proceeding, and all, and if they receive only 8,000 crore, then if you see the loss here with the HDFC would be around 2,000 crore. So nobody, as a bank, they don't expose themselves for a unlimited risk. They always will find a way how they can mitigate the risk, because every instrument that carries some certain amount of risk with itself. Okay. Then loans, those are normal loans, term loans or business loans. Terms loans, it means they come up with the terms 482, 223 in a month, right? And with the interest payment and principal and how they can pay the means borrower can pay the loan amount to the lender. So that loans we call term loans. There are business loans, term loans, personal, and there's so many loans types, right? Repurchase agreement. So this happened with the government securities and at an individual level also. So many times we do this agreement, and most of the hedge funds they do the business in a repurchase agreement extensively. Why they do this? Let's say XYZ hedge fund is holding the 1,000 government bonds, right? The value of bond is, let's say, 1 lakh, or yeah, 1 lakh, let's say. And if you do the multiplication of this, this is the amount. So that it will receive up to the maturity. The terms you can see for 10 years. Now you have the asset, right? And even that asset carries the interest payment also up to 10%. But now the fund has a liquidity issue. They don't have a fund. They don't have a fund to run their daily operations. See, there's a fund. They can also look for a short-term credit facility from the institutions, or else they can sell this security to someone else with a commitment of buyback after 1 year. So the fund will buy back the security from that the institutions, right? But that buyback price will be higher than the sell price. If you are buying the security, or if let's say you are selling the security at this price, but the buyback price should be this. So you will have to pay the extra price to buy your security back from the counterpart. That's how the most of the businesses they can resolve their liquidity issues to enter into the repurchase agreements. Or most of the funds they do invest in the repurchase agreements. They buy the securities from the counterparts or banks or institutions, and they provide fund to them for a 3 months, 1 year, 2 year, depends. And that institutions will buy back the security from the hedge fund houses up to the maturity. Right. So here in how they can generate their income, how the hedge funds they can generate their income. See, for a hedge fund, let's say the bank sold the security in this way. So it means XYZ would be the buyer. HDFC sold the security. Right. So they have purchased with 1000, and once they sell the security, their price would be this. So almost if you calculate 100, quantity is this, multiply with the quantity. See, the hedge fund profit would be this. And if you calculate in terms of return, this amount divided by this amount, almost 10% return should be on the investment, and that is within a 1 year of time span. Okay, so might be you may have a questions why they are approaching to the hedge funds to get the money or to resolve the liquidity issues. See, even they can approach to the other financial institutions, but let's say your credit score is very low. You don't have a strong credit history. In that case, bank won't be able to pay the or do the funding to your business or even to the institutions where in which business that you are, correct. So it means only options that it will have this: sell the securities with a commitment of you will buy back the securities from the other institutions and at a higher price. Buyback will be at a higher price. That's the reason most of the fund businesses on their balance sheet you can see this repurchase agreement. But this work in such a way. You're selling the security with a commitment of you will only buy that security after the maturity. Okay. Then ABS, this ABS and MBS, this both products are very interesting. See, in a normal, the bank's business, HDFC Bank. Let's take the example of HDFC Banks. What's the normal business activity or core business activity? To accept the deposit, offer the loan and advances, correct? Do we have this here? Okay, we have this. Let's say HDFC Bank accept the deposit of 1000 crore, right? And they have offered the loan and advances to the customer. So it means they have offered this 1000 crore as a loan. This won't happen in a reality because 1000, if they accept 1000 crore as a deposit, then they will have to transfer some of the amount to the that the CRR account, then the statutory reserve, right? So that is a different story. But for example, let's say they have received 1000 crore as a deposit with 5% of interest for per annum. The similar way, they have offered the loans, home loans to the customers or to the borrowers. On an average, the interest payment is around 9%. These are the customers. Let's say, yeah, basic. Here, if you see the net cash flow for loans that the bank already offered, right, around 9 into almost 90 CR, and the outflow that the bank is offering on a deposit which is almost 50 crore something, correct? 50 crore. So net profit or net or gross profit, if you can see for a bank is almost 40 crore, around 40 CR gross profit. Okay. How can bank increase this profitability? Any idea? Exactly. So pool we call MBS, mortgage backend securities. So this entire loans will be converted into one pool. So they will create a node or tranches with the value of rupees, let's say 100 crore per tranche. They will offer the interest payment on it, 3%, 4%, 2%, whatever it is. That would be depends, right? They will offer it and they will raise another 1000 crore, right? Already their investment, the loans that they have offered in the market, the size of loans around 1000 crore, right? But again, they will sell that loans to the investors and raise the 1000 crore again, and that 1000 crore they can also offer as a home loan, mortgage loan for a different properties. And if you see, so the net profit again 90 crore, 9%. Yes, everywhere. This happened everywhere. Banks also create these tranches. Yeah. If you see here, the 5%, 50%, the interest for a deposit means this is an outflow, right? So 90 crore minus 50, 40 crore. From this 40 crore, they can pay the 35 crore as a interest payment for that the investor ABS holder, that the mortgage back securities holder, right? 35 crore plus 50, 85. So here still they will have a 5 crore, but this 5 crore plus this 90 crore would be around 95 crore with them. Say this. If they didn't issue this MBS, only they could earn 40 crore, right? But how they have multiplied this 40 into double digit growth? So almost 100% increment in the profit. And this is the power of mortgage backed securities you can see in the market. Then what about asset backed securities? It's very simple. Those would be like different loans, PL, credit card loans, then the auto loans, and there's so many loans types. So they can allocate the loans. Means here different loans will be converted into one pool, and on which you can create a ABS, asset backed securities. The rest work would be remain same, but the interest payment actually they generate high return on a this ABS, because if you modify the rate, this is 9%, home loan 9%, PL 15%, right? The car loan around 7 to 8%, auto loan around again 7 to 8%, credit card goes around 30 to 35%, but we'll consider this is 30%. See this, their gross profit will be automatically increased 105 here, right? This particular outflow of a cash should be remain same 35 crore. But the main important is if the instruments are risky, even investor also they will negotiate with the interest payment. They may also ask for a high interest payment. On the asset backed securities, you may expect at least 4.5% interest rate also. It's a possibility, right? But there is a lots of framework is required, right? Rating agencies, the rating valuations, business valuations, other debts, the profit, revenues, their growth, their policies, means there would be a number of factors. let's say if they are into the mortgage business, right, or let's say they are into the loan business, but they offer loan to the government projects only. So in that case, nobody will. And if that the institutions convert that government's loans into one pool, then nobody will invest into it. Everyone will ask for a discount, because Indian government, they invested into Salma Dam, which is from Afghanistan, right? They have even invested into roads, the Afghanistan government roads, parliaments, and all. But now see the situation. Now the government, Indian government, they are not able to recover the debt amount. And if tomorrow the government banks, they come up with the resolution that we want to convert this debt into special purpose vehicle, so can you participate in it as an investor? Right. So there's simply, there will be a process. Even the hedge fund, at a hedge fund level, their research team, investment team, they do the thorough research of a product, ratings, returns. They can also compare with the other bonds. There would be a number of factors. And if the EBS or MBS, they are effective, then definitely they will invest into it. Otherwise, no. This, the research and all this happened with every financial instruments. Let's say if the bond market yield increase, right? Let's say around 5% or 6%, the bond is giving the return to us, and on an average, equity is giving 7%. Then nobody will invest in equity market, because the bond is giving fixed return to us, and that is without any risk. There is no dent to the capital. Then why should I invest in equity market? The similar way, if the securities are risk, the investment is riskier. Securities that they created on assets, and the asset is like in a danger position, then nobody will invest into that asset back and security investment class. Okay, the research should be there. There are institutions who offer the research facility and all, and that's the reason every fund they appoint the broker as well, who can, or rating agencies as well, who can help us to get the insightful information on the different financial products. Okay, bonds, we'll discuss that bonds in details later on with the different terms. Forward contracts and swaps also will discuss in details, right, in another session. But here, what we are trying to connect is all the financial instruments, those are from over the counter market. And this is the other are from listed space. Okay, how this happened then? How the trading mechanism work? Your fund manager, let's say XYZ fund manager is there. Fund manager send the request. Now at least we know the products, right? Let's say fund manager send the request for equity. So it means that request will pass it on to the NSE side, but you cannot do this directly, correct? So you need, means fund need a system that the fund can send the order to the live trading system. So the fund manager send the request to the broker. Broker has a access of national stock exchange mechanism or system, and this broker pass this information or send this information to the live system or database. If the order type is equity, and if you have sent the request for a sell, buy or sell accordingly, that request will send to the, means broker will send the request to the NSE system here. This team will accept the instructions from the broker, confirm the trade matched. So it means if you are a buyer, there should be a seller Seller should be one or more against your transaction, correct? Sometime it's not possible to get only one buyer or seller or counterpart, so there would be many. But that is a further process where you need to allocate the trades accordingly, and then you need to chase to the counterparts, right? But the point here is the the National Stock Exchange team, they match the instructions, right? And once matched, they send the confirmation to whom? To the broker. Then broker will communicate to fund managers teams again. Order matched or trade executed successfully, right? See now, every fund manager or fund will have a demat account or trading account will be with the broker, demat account will be with the custodian, right? Because custodian take care of the demat account and the foldings and other activities on demat account, correct? So here if you see, the broker will confirm to the fund managers, and then fund managers team, which team? Trade processing team, they come into picture. After execution at a front office, brokers, live systems, NSE market, that is a front office. The trade will be executed in front office. So instruction send format would be, you can send instructions in this format. Portfolio names, PIMCO, BAM, XYZ, those are the fund names, portfolio means. Fund IDs, trade type, if it is a new, cancel, amendments, depends. Symbols, it means security names. LSIL, Imagica, BBMed, right? That the security want to sell or buy. ISIN, identifier, trade date. Let's say trade date is today's, and if you send the order today, that also you can do. Exchange, NYSE. There would be different stock exchange, BSE, NSE, then New York Stock Exchange, London Stock Exchange. So that depends on the fund, where the fund is listed and for which stock exchange they are trading for. Trade type, that the counterpart, JP Morgan, BlackRock, PIMCO. See, the same process will be from the counterparty side also, right? If you execute the trade, their team also will execute the trade. If you execute the trade for buy, they will execute the trade for sell. If you chase them for a buy trade, they will chase you for a sell trade. Correct? So this will happen. Okay. The trade type, let's say you are selling something to the JP Morgan, BlackRock, and PIMCO. So if you send the instructions to them, the trade will execute it. The same informations. See, every stock exchange they require clearing agents. Why clearing agents? Even state corporation, they are into the clearing business as well, if I'm not wrong. They help. They help to the. They work for over the counter market as well as they work for a listed securities also. They are into the clearing business as well, because those are like a middleman between the stock exchange and the two counterparts. Because every day on a stock exchange platform there would be millions of requests for buying and selling the securities from a different counterparts, right? And that's not the business of stock exchange to do the or execute the further process. They just match the instructions and send that order to the clearing agent. Clearing agent, it means There are different platforms: DTCC, Depository Trust Clearing Corporation, Euroclear, ClearPar, Crest. Right? They work as a clearing agent. So it means the same details, your instructions will be projected. When you send the instructions, there won't be a counterparty name. But one, yeah. So once you send the instructions, stock exchange team, they will match the counterparties. After match the counterparties, that instructions will send to the ClearPar. Then after you can see the name of counterparts. Then this similar instructions you can access the clearing. Here you can see this clearing corporations data, right? In their books you can see the counterparties, seller of your securities, right? And then that trade will pass it on to the middle office team. They can access this portal, Euroclear portal, and check the orders which the fund manager sent to the broker for a trading or for a selling of securities, and they match with this executed trade. That should be matched exactly, and that function we call trade captured, right? And this Euroclear, this institutions that the take the responsibility to execute, to help you to for execution of a trade successfully, with ensuring that there shouldn't be any default on a payment or obligations from any of the counterparts. That the main objective of that the clearing agent is to help the counterparties to execute the trades successfully, and that is defined time frame or timeline or deadline, which is T plus 2 stipulated time frame. Let's say this trades comes at middle office and you are the part of middle office. On a T plus 1, you can check the access the portal and check the trade. Front office instructions should be matched with the your ClearPar data, and if it is matched, then you can send this same mail to the JP Morgan. Why? Because if they are the buyer of your securities, so it means the funds should be ready in their account to pay to you, right? And the similar way, their team also, they will send a mail to you where you can check. They will ask for a status of a securities, because securities should be available in a demat account, and if it is not, it means that the trade will not execute. Clean status, it means securities should not be under any obligation like security borrow and security lend, SBL. Securities shouldn't be under the place obligation, that we place the security and create the margin, right? That shouldn't be under any obligation, and if it is, then the custodian won't be able to transfer that security to your counterpart, which is JP Morgan. So eventually that trade will lead to the failure, cancellation. So you can check that security where you can check it in your demat account, right? Funds demat account, XYZ fund demat account, Pimco demat account, BAM fund account, because we'll have the access of your demat account also, where you can check it. Yes, the securities are available. Then you can confirm to the that is JP Morgan, yes, the securities are in available status. You can please keep the fund ready. So on a settlement date, the agent banks can transfer the payment. So we can also send the instructions to the custodians to release the securities to you. And the same. Yeah. On a T plus 1, they also received the same instructions. They booked it into the system for a recording purpose. Who is the buyer and who is the seller for which or what securities. And on a T plus 1, once they get the confirmation from the counterparts, then they also exchange the ownership of a security from one account to another. Right. So let's say in this case, so once everything is ready, then so you can send the instructions to the custodian that so you can release the security from my demat account to the JP Morgan, BlackRock, and PIMCO, correct? And the similar way, counterparty, the JP Morgan, BlackRock, and PIMCO, they will send the instructions to the Asian banks who can proceed the cash to you because you are a buyer. You should receive the cash, correct? Otherwise, you won't be able to send the instructions to the custodian to release the security. Always the clearing agents will try to do this activity at the same time just to avoid any risk. And the clearing agents will send the instructions to the custodian that the you have credited the fund as a buyer, right? And please credit the security to the buyer's account. Seller will seller will receive this fund and buyer will receive the securities, and that's how settlement will be done. The same instructions should be here with the custodian's demat account. And then finally, that the once the settlement done, the same communication middle office team will pass it on to the back office team, and here you can see actually fund accounting team will record the transactions in the books of account. So eventually on a T+1 they will record it, and on a T+2 on a settlement date they will review it. There shouldn't be any change in the transaction, and after that so you can claim that yes, you are the owner of, means the fund is the owner of that security, and whatever corporate actions will happen, so that all corporate actions benefits will receive to the security holder. So it means to the funds for which you are doing accounting, or that the holder, security holder, who is holding security in the demat account. Okay. So see the system now. If the security is a listed security, then the broker is sending the instructions to the market. Market is matching the instructions, sending to the clearing agents. Clearing agents confirming to the both the parties that you are the buyer for the security or the seller for the security. Please confirm the instructions. And if you confirmed, then the communication will send to the agent banks and custodians. To custodians for release the security and agents for process the cash against the trade, correct? And then finally, trades will be executed within a timeline. So the first application that we required, which is broking system and market live system, where you can access all the market information, and that would be the live application. Live, it means all that is the stock exchange terminal or platform, you can say. All right, any questions so far? Okay, so now, so if the fund they are trading into the security, it means so that the trading will be converted into investment, right? If you hold the securities, then we treat it as an investment. Let's say the fund they have invested into variety of financial instrument, preference equity, bonds, FX contracts, equity, derivative options, total invest. Okay, so these are the types of trades they have invested, and this is your total investment, which is 95, 95 lakhs, crore, thousand. You can assume anything, and this would be your total balance. If you want, you can create the general partners and investors contribution as well. Let's say 20 crore that the general partners means fund invested into this particular fund, and limited partners they have also invested, which is 80 crore. Those are investors. So you can create this entire data, but where you can create this and how? Think from a business analyst perspective. If there are the investors who have sent or transferred the fund to you or to your fund, so it means we need to create the accounting account for investor as well, right? Otherwise, how can we contribute? How can we trace their contribution? Correct. Then, if the fund managers they are investing into the funds, or if they are not, but still the fund, if the investors pay the fees to them, so fees will receive to them. So it means will have to create the accounts for general partners as well as for limited partners, and we'll have to again fill all the details like their individual contribution, total contribution, paid amount, unpaid amount, their fees rates, everything that should be in the application. As well as at another side, fund is investing into variety of different financial instruments. But on a daily basis, we'll have to do the accounting for all the financial instruments or investments. So it means we'll have to create the records in the system for all the financial instruments. That's the reason here we create all this information on accounting platform. The name of the platforms are Geneva, Genesis, Aladdin, Multiphone, Invest One, Advenita, and there are so many. These platforms, it's a books of organizations where everything will be recorded. It's a books of fund where everything will be recorded, from investors to their contributions, expenses, expenditures, income, gain, everything, financial instruments, everything will be recorded. So, for any question, okay. So now you can link. So it means live system to data is coming from the live system to Geneva. All this informations will be comes from the market to Geneva system in our accounting system. Here you can see so many teams will work on these Geneva applications, and what they will do, they will record the transactions into the applications. They will create a specific tab or sections for a different that the segments like equity, bonds, FX, because once the middle office operation team confirm the trades, that trades will comes from the dashboard, or that the trades will comes from their the front office side to the accounting system. Apart from that, with the companies like State Street, they have MCH. That is a live application. Live, it means that is linked with the market. Why market? Because if the institutions place or their the different teams, if they place any request, so that everything will be projected in the MCH for funds, for securities, for trades, for fees, for taxes, right? And codes will be given, that the everything will be given it to you, so you can accordingly access the codes and get the information of that particular section. And what we do after that, we pull the information from the MCH, means live system, and we record in the offline system. And this offline system data should be matched with the MCH. And this MCH would be, see, with every institutions they have their different platforms. I have worked on IMBL. That was the live interface of one of the institutions. Their entire trades and transactions would be in that applications. Only few people will be means access will be provided to only few people where you can actually transfer the payment from one account to another also from the MCH. It's a live application. That's the reason only they send the access for a limited people, as well as you can read the transaction. So you cannot edit anything. And if you want to edit, so that request should be sent to the concern team, booking team, who is accountable for amending the transactions into the books. The MCH is the original book of State Street. And the another would be so offline book, where you can maintain the records for all the clients, all the financial products. Correct. That recording means, which is a starting point of accounting, recording of transactions into the system. Okay. After recording all the transactions in the Genesis, Geneva, any application, right? See that here till now we have seen three applications. One is live system, then the MCH, and the Geneva. Correct. If you fit all these details in these applications, you need to have another application for what? For reports. And the reports format would be in this format. Okay, here are the report formats. Let's say the application name is Axi1. Axi1 will be linked to the any of the above applications. Any of the above applications, Aladdin, Multiphone, Invest One. Whatever changes that we amend in these applications, everything will be projected in the Axi1. With the Axi1, there would be so many applications, but just for an example, we pick this name. Right. Here with the Axi1, you cannot make any changes into it. Only what you can do, you can generate the report in a financial reporting format. So it means in this format. This is a reporting template. You can download the report in this format, right? And you can validate all these values with the system. All the values should be validated with the system, and that's how we do it. There are reporting teams who pull the reports made for main ledger, sub ledger, trade book, P&L, balance sheet, income statement, pending trade status, accrued income, interest payment, dividend payment. So you can download, means there will be different templates will be provided, formats will be provided to you. You can select the date and download the report. This will be your fourth applications that we required, right, to generate the reports in a reporting format. And if let's say if you pull the reports and where the amounts that is not matching with the system, or amounts that is matching not matching with the client also they will provide, or the let's say the amount is not matching with the Bloomberg, in that case you can send that mail to the trade booking team, corporate actions team, income. There will be different teams to make the necessary amendments in their books, and after that you can regenerate the report. So after that changes will be reflected into this Ax1 application, and you can download the reports in which format, or in the reports that which your reports that you're looking for. Okay. Yes, with every institutions there would be similar structure. The problem is on a Geneva, let's say there are so many, the teams that are working on a same platform, Geneva. Sometime only they provide access you for a trade processing tab only, maybe for a Recon tab, maybe for a compliance, maybe for any other reporting, maybe for a transaction processing, corporate action, income processing. So accordingly they work on it, and that's the reason they are not aware about if the other team is working on the same application or not. And the Axie one, which is a reporting tool, a reporting team, they actually pull the reports from this application, and they even escalate to us if the data is not matching with the market data. Then accordingly, the different teams, they action it and they confirm to them, yes, now you can pull it. Apart from that, we required okay, two more applications. Okay, please go ahead. Yeah, correct. With every institutions, there would be similar structure. The application platform should be different, but this the mechanism would be remain same. There won't be any change into it. Okay, and the two more applications, one more which is this Creased, ClearPar, Euroclear, DTCC or SWIFT. So these applications are like settlement platforms. You don't actually need to settle anything on their platforms, but the clearing agent that helps you to get the proper information of a security to you on time, so which can help you to get the trade settled into your accounts. So it's a platform for where the counterparties can come together, discuss, coordinate, and execute the trade successfully after the trade place in the front office or on the stock exchange. So it means in an organization, definitely you may see any of the platform access that will have to the trade processing team or different processing team. That depends on the instruments. But every instrument which required a counterparts or clearing agents which can help to get the clearance of a trade on a time. Another application should be information provider, where you can check all the security information, accrued interest, corporate action details, security active or deactivate status. Everything means everything that you can check the information on a store that the information provider site. If there is, let's say, XYZ institutions and they are not able to afford the Bloomberg's fees and all, they also appoint the local institutions which can help to get the information of a different financial product to them on time. Whereas a fund business or the custodian business, that's not their job to do the investigations and research for a particular product. There are research firms who are fully means they're working on a different financial products, and that their main and core job is to do the research for a product and sell that report to the or research to the banks or institutions or the different stakeholders who are into the investing business. And that's the reason the institutions, they provide access to us as well for any of the resource, router, Bloomberg, and there are another as well. And the famous one, TLM and IntelliMatch, transaction lifecycle management. This is a platform where you can manage the payments. So it means payments will received in this application, right? So debit versus credit. So debit or credit, one transactions that will be projected in the system once the trade gets settled in the internal accounting system. That that settlement we called ledger. So it means ledger will be created, and once the agent banks or custodian, they confirm they have processed the payment. If it is a stock payment, then the custodian will confirm, and if it is a cash payment, then the agent bank will confirm. So it means they will release the notification, and then after there will be one projected creator in TLM. That projection we call statement. Statement versus ledger should be matched, right? And this assume that your trade has been settled successfully. This is like audit work or monitoring work that you can say. You are monitoring the transactions, right? And with every almost all the institutions, they have this TLM or either IntelliMatch platform where they manage their payments They match it. If the transaction is matched, so it means it has been settled successfully. And if it is not, then there would be something that has been missed. Maybe ISIN, maybe trade date, settlement date, quantity, price, maybe counterparty name sometime that you need to investigate, find out, and match it. Yes. Now I'm done with the applications. Right. This is how the applications work in every institutions. In every institutions, there would be similar structure with the firms. Now, okay. Yes. Slowly and steadily means everything that you can connect easily. See, the main point is with every institutions. Let's say street, okay. So what they do, it's a mandate provision to create the firm account, safekeep account, loans and advances account, right? Try to understand. If you deposit the money, right? So bank cannot accept that amount in a firm account. This account we call control account. This applies to the equity as well. This applies to the investment as well. Right? The way banks, it's mandate to create SLR account and CRR account. Correct? The similar way bank need to create the another accounts. That is a firm account, safekeep account, loan account, SLR and CRR. These all accounts details will be shared with the Reserve Bank of India. If they received 100 as a deposit, see, bank as a bank they will have their assets also. Let's say their asset is 1000 crore and as a deposit they have 1000 crore. So this, let's say the assets that they have transfer in this way. Safekeep account balance will be transferred to the loan and advances, which is 750, SLR 150, and CRR 100. Then from this point, your accounting will start. This should be your main book. Yeah, yeah, please. Okay. Safekeep account, loans, advances, and all right. So then from this point, your accounting will start. From all this is like initial balances, opening balances for all the accounts. Right, firm account. See, with a firm account balance, let's say this is a state corporation, and that's the main structure of the different accounts. They can do anything with their firm account balance. They will not have any obligation on it, even though the regulator also will not raise any question on it. But they cannot park the safekeep account balance on their account, even also by chance. The main purpose is to, if you have received fund for a safekeep, it means, let's say I have transferred the security to you for a safekeep purpose. That should be in my demat account. That shouldn't be in your firm account. And if it is, it means you have what I can say, breached the obligation. Exactly. Then they raise the concern on it. Why did you park the security on the control account? And we are here to make sure that if we have received the request for a safekeep, so that the security should be in safekeep. If your fund trades something, so that should be recorded in the firm book only. So you cannot mix two transactions, right, with each other. And this applies to the loans as well. This applies to the CRR, SLR. It should be recorded accurately in each of accounts. And this framework is mandatory to maintain for all the banks, brokers, and to everyone. Yes. And apart from that, you may see the different accounts as well. Facilitation account. Let's say if it is a custodian, they will have a facilitation account. Then suspense account. Then right of account. Then apart from that, yeah, okay. Control account. So it means which is for us. If you see any balance on it, it shouldn't be any balance on it. You can accept the balance on the control account and you can process the balance to the different holders. Let's say stock, you can accept the stock on this account, but you need to process that stock to the, let's say, EB, A and B, that they're expecting stock payment. So you can process that payment to them. And after all, make sure at the end of the day, payment should be zero here. And that should be clearly or should be transferred to the or processed to the A and B. And if it is not, that trigger in the regulatory report why there is a balance on control account. And still, let's say you have a balance on control account, but you don't know that who is this, the balance is from which account or which demat account and all. For a timing, you can transfer that balance to the facilitation account. And meanwhile, you can do the investigation. But make sure that here the balance amount is zero. Simple. Suspense account, let's say you have received extra cash or cash received, but that you are not able to reconcile it due to XYZ reason, that should be recorded. That you can post or transfer that account amount to the suspense account for a time being. And you can do the recon. Right of, you have received the transactions, the amount of a transaction is only $5 or 5 rupees something, which is very less. So that you can transfer to the right of account. And meanwhile, you can do the investigation. And once it is confirmed, then you can reverse the transactions from the right of account to the main account. But the balance shouldn't be on a control account. Yeah, the structure would be like for every currency there would be means required this structure for UR, USD, INR, GBP, right? So this means a structure will be extended if the organization is dealing in a different currencies and all. This structure would be different. Same structure would be required for different stock exchanges also. NSE, BSE, NYSE, LN. But the structure would be same. The stock exchange name that would be different. All the accounts are very important and that is required. Without that, we won't be able to do the accounting. See, eventually we don't do the account, we don't make any changes in the safekeep, control or firm account and all. Accounting, it means what we do, we pull the reports or statements for this different accounts and we review that statement and do the recording in the Geneva or Genesis books or multi-phones book. Accounting, it means to refer the financial statement or statements of the accounts, let's say for a demat or let's say for a other investment holdings account, refer the statements from these accounts and do the accounting and create the entries in the offline system. Correct? Because most of the people what they think, so accounting it means you need to enter into the account of that the institutions and make the changes into it. No, we don't do anything. Otherwise, even if they allow me or provide the access for the live account, then I can send the payment to my own account. 1000 crore invest that the fund that I can transfer or initiate and then resign the organization. And then so many frauds happened in past as well. First while there was one fraud with the credit stress. One of the BP that the set up the dummy accounts from the freshers system or desk and they transfer 64 crore to those dummy accounts. And then later on, it has been see everything for every transaction we have a system. And then that the transactions has been captured in the that the money laundering. Additional so there would be means every organization it is a mandate to have a money laundering team who can monitor all these activities. So this and unfortunately what he done, he set up the dummy accounts but the accounts were like inactive, and once you send anything to the inactive account then you require lots of approvals to reverse the payment back to the actual accounts, and that's how means that triggered in the money laundering report, and then the action was taken, payment reversed, and that the avp sent behind the bar. This also happened. That's the reason. So we only refer the statements and accordingly we create the entries in the books of account. That's the reason we have these applications. So many applications that we have. Geneva, Genesis, Aladdin, Multiphone, Invest One, Advenita, and many more. Okay, I'm done.